You might think your business is profitable, but is it really? Many entrepreneurs confuse revenue with profit, and that mistake can destroy your business silently. You might be selling more every month, but still running out of cash. Why? Because you don't know your net profit. In this video, we'll break down the exact formula, step by step, with real numbers and examples. Let's start simple. Net profit means the actual money your business keeps after paying all expenses. These include your cost of goods sold, rent, salaries, marketing, electricity, and even taxes. It's often called the bottom line because it appears at the bottom of your income statement. The formula is simple. Net profit equals total revenue minus total expenses. This number shows your business's real financial health. You can have high sales and still have negative net profit if your expenses are out of control. That's why net profit is the single most important number every business owner must track. Let's see a practical example. Suppose your total sales are $50,000 in a month. Your cost of goods sold is $30,000, giving you a gross profit of $20,000. But you also spend $8,000 on salaries, $5,000 on rent, and $2,000 on utilities and ads. That's $15,000 in expenses. Now, net profit equals $50,000 minus total of $30,000 plus $15,000 equals $5,000. So even though you earned $50,000 in sales, your real earning is $5,000. This calculation reveals whether your business model is efficient or if you're just working hard without meaningful returns. Many people confuse gross profit with net profit. Gross profit tells you how well you produce or sell your products, while net profit tells you how efficiently you manage your entire business. For example, a restaurant may have great food margins but still lose money due to high rent or staff costs. That's why investors, banks, and even tax departments care more about net profit. It's the clearest sign of sustainability. A positive net profit means your business is growing. A negative one means you need to cut costs, raise prices, or rethink your operations immediately. To improve your net profit, start by analyzing your expense categories. List every cost: inventory, rent, salaries, ads, maintenance, and taxes. Ask yourself, which ones are essential and which are just convenient? Reducing just 5 to 10% of unnecessary expenses can raise your profit instantly. Another smart move is to renegotiate supplier rates or switch to automation for repetitive tasks. At the same time, increase efficiency in sales. Higher revenue with stable expenses automatically increases net profit. Remember, the goal isn't just to earn more, it's to keep more of what you earn. Knowing your net profit helps you make smarter long-term decisions. It guides how much you can reinvest, how fast you can grow, and when to expand. If your net profit margin is rising, your business is on the right path. If it's falling, something's draining your money, find it and fix it fast. Every successful company, from small startups to global brands, tracks this one number religiously. So, before you celebrate your sales milestone, calculate your net profit today. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.